financial space now. Of course, there's been some of the big names that have been moving the markets, but an interesting development has been the government introducing a 20,000 crore rupee credit guarantee scheme, and this is for the microfinance sector. The idea is to boost liquidity, to revive lending to this sector, which has seen a bit of a decline when it comes to bank lending to MFIs. But will it really move the needle? What are the issues that still remain? Let's invite Alok Mishra, who is the CEO of MFin, joining us today, to decode the scheme for us. Mr. Mishra, thanks very much for being with us here. Let me start with the scheme itself. The size has increased to 20,000 crore from 7,500 crores that we saw earlier. But what's different this time around is also a fee that has been added, 0.5%, and also this cap of 20% of AUM or 300 per MFI. Does it look significantly better from here on? Is this alone going to move the needle? It is for a 6-month period, of course, Mr. Mishra.
Thank you, Ritu. I think it is a very significant move by the government. We have been pursuing and requesting the government for this for last 6, 7, 8 months. And finally, the things have moved. I'm thankful to them. 20,000 crores is a big amount. And as government has said, that it will benefit around 40 to 50 lakh borrowers. With a guarantee of 20,000 crores, banks can leverage funding of around 25,000 crores to the sector, to the NBFC MFIs, and that will be a huge fillip to the sector. As you already said in your opening remarks, that the portfolio of the sector has fallen. If I compare with March 24, the dip has been around 28%. From 4,33,000 crore, it has come down to around 3,10,000 crores. And in the process, the main thing which we flagged to the government was that in this funding winter, what has happened is that around 50 to 60 lakh customers have gone out of the fold of formal finance. And we will be able to bring them back with this liquidity, and the sector will also get a fillip.
But, Mr. Alok Mishra, ultimately for a bank or an NBFC to lend to these institutions, it's not just the guarantee that is going to play out. It's not a 100% guarantee. It is very much the credit rating, the risk assessment, the underwriting. Now, if you look at the asset quality itself for these MFIs, if I look across the buckets, 1 to 30 days past due to almost 90 days past due, the asset quality has improved, yes. But if you look at the 180-day plus bucket, there's a significant rise. We're looking at almost 16% kind of, delinquency rates. How is this number going to convince the lenders, and is the benefit going to then be restricted to a very small segment of MFIs that have stronger promoters, better ratings?
Yeah, no, very good, pertinent question. See, as you rightly said, 1 to 90 days, which is the recent lending, that has come down to already 1.9%, which is very much normal, even better than what we saw 2-3 years back. And when you talk about 180 plus, being higher at 15% or so. See, these are the loans which you are seeing as 15% on the books, but all the NBFCs being on the ECL system under Ind AS have already provided for these loans. At around 90 days only, the provisioning becomes 100%. So these are old loans which have now been shown under 180 plus bucket, and they have already been provided for and accounted for in the balance sheet. The new portfolio, as you rightly said, 1 to 90 days or even up to, if you extend it up to 120 days, is behaving normally. And that should be the comfort. These are old loans and have already been provided for. This should not be a cause of concern.
Okay, so you expect asset quality has bottomed out then for the segment?
Yes, because for last 4 months, if you see, it is gradually increasing every month. And in January figures, which I have got, 1 to 30 is 0.8%, and 31 to 90 days is 1.1, which totals 1 to 90 days of 1.9%. That is, even if you look at 3 years behind, it is similar. And we have to also factor in.
Yeah.
We also have to factor in
sure, go ahead.
That, see, when we do the asset quality, it is a factor of the gross loan portfolio. And 1.9% in a reducing gross loan portfolio has the denominator impact. If the sector would have kept moving and disbursing at the same speed, these figures would have would have been even lower, maybe not 1.9%, maybe 1.2%, which is a very good figure.
Mr. Mishra, I just wanted to point out the average ticket size of these MFI loans has risen quite significantly, almost 61,000 crore. And when we speak to lenders, it is because they say they're not going out looking for new borrowers in the market. A lot of this is because it's repeat lending. Again, to the same segment that has been vetted, verified, has, stronger promoter backing, is better rated, and therefore the ticket sizes are also looking up. Do you expect this mix to change, this risk assessment for the lenders to meaningfully change just thanks to this 20,000 crore rupee guarantee kicking in? And we've seen also in the past when redeeming this, when banks go to, the Credit Guarantee Trust to redeem this, that's also not been a very smooth, straightforward process.
Well, let me tell you that, as you rightly said, in 2022, the guarantee scheme, which was launched in the wake of COVID, had 7,500 crore outlay. And I don't think I think if I comes to my mind, it is around out of 7,500 crores, which would have entailed a funding of around 10,000 crores. Only 12 crores or 11 crores went into default, which recourse had to be sought. So it's a minuscule thing. I don't think that is an aspect which you should worry about. And when you talked about average ticket size of going up to 60,000, well, repeat customers, if they are with you for 6 cycles, 7 cycles, if the repeat cycle loans are higher, that's not a cause of any alarm. If you still look at new to credit customers or first cycle customers, the loan size would be even much smaller at 40,000 or 45,000 rupees. And that has kept pace with the inflation. That has kept with the rise in the prices. And even if I look at nominal sense, it has not kept pace with that. So the ticket size is not much of an issue.
Okay, Mr. Mishra, we've run out of time. Just 10 seconds. Since we have you, any comment on this Bihar MFI bill and how much of a concern will it be for the industry? It's 15% of the market, even though RBI regulated entities are exempt.
Yes, because as you know, that the bill was passed by the Legislative Council on 26th of February, and we are almost a month down there. We are not seeing any impact, and we are hopeful that things will continue like that.
Okay, Mr. Mishra, thanks very much for joining in with those. We appreciate your time. We have to slip into a short break now, but when we return, we'll be joined by J.N. Gupta, former ED of SEBI, Madhu Kela, the founder of MK Ventures, and Mohandas Pai, who is the chairman of RN Capital and former CFO and board member at Infosys, to discuss an interesting open market buyback issue.